Laughing because back then it was called Aberdeen, wasn't it?
It was back then. It was called
Let's go,
Aberdeen
Mr.
Port.
Gilbert.
And to Mr. Finn's credit, he has been consistent that it is BlackRock with their better than good earnings that they
They're not
showed
going to drop the
last week.
fouls over at that asset
They're
manager.
not going to go. No, no, no,
Okay.
no. It's not going to happen.
Equities right now down about a third of 1%
I
on the
hope.
S&P just to kick off the trading week. Equity futures negative a third of 1% and down about 11 points. Yields a little bit higher, Tom. Up 4 basis points. Your 10-year 354.57. You mentioned it a few times, Tom. Crude.
You're right, guys. So, welcome to the live stream. Got a few trades running. May as well hop online and monitor these positions. We'll go through a market update. If you've not watched the market update that we just sent in, there isn't much to touch on. Just waiting for a breakout to occur. But yeah, welcome. In terms of Bitcoin's current structure, got a little bit of price compression. Prices have slowed down. Could be a range. Could be um, a bullish triangle. So we'll see how things kind of play out here. You're right, Ozzy. How you doing, my man? You okay? Let's see what we can get here. We have got a position open on oil as well as copper. Oil was very, very, very well in profit. Okay. So let's see how that one plays out. It could make our week, in all fairness. It's a very nice position opened. So we'll see how things kind of play out on that end. We'll go through the chart in just a second. But yeah, price compression, potentially a range. So we could come back down into structure, potentially break out. We do have this 100 just beneath. So we've got good amount of support to support this move back up. Now in the update that we just sent out, we do go through the potential outcome or option in terms of a fake out to the top and then straight back down into structure. If we do get that playing out, okay, and coming straight back into this structure, it does look like we're going to come down. Potentially that will be our top, and then a deeper retracement on crypto. Okay, so we'll have to keep a close eye on things. We'll have to keep a close eye on the dollar. That is of importance. Yeah. Let's go over to the dollar index. Dollar index is also ranging. Okay, so kind of got the opposite happening here than we do on Bitcoin. So it could be the case again that we actually come and trickle down back down to this support level. It's only really tested it once, so it wouldn't surprise me if we do come and test it again, build up some structure, move back up, and then maybe move back down, actually breaking through the structure. If that does play out, guys, then yeah, I mean, it's looking good in terms of crypto prices making another push up higher. Okay. So bear that in mind. Now, in terms of data today, let's have a little look. Let me go over to the economic calendar in the group. UK average earnings already come out, so UK unemployment rate already come out. German CPI, Bank of Japan's interest rate. Okay, so there's not too much. Majority of it should have already come out. So let me have a little look again on the actual figures. Da, 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 da. Um, today's Tuesday. Okay, so UK average earnings, excluding bonus, went up. Okay, index plus bonus went up as well. Claim account went up. I mean, unemployment rate stayed the same. German CPI has stayed the same. That was the year-on-year figure. Okay, month on month has come down. So yeah, things aren't looking too bad. Okay. In terms of anything else, yeah, we don't really get anything else except for that Bank of Japan interest rate. So pretty clear for the rest of the day, guys. So should be a nice trading day to trade. So yeah, let's see what we can get here. Yeah. Let's go over crude oil. Okay, so we sent out a trade not too long ago. I think it was yesterday or the day before as well. We've added some lots to it, but this is ramping up, guys. This is going to be a very, very profitable trade. Got a few targets along the way, a few levels to kind of break. But yeah, ultimately, in terms of kind of long-term perspective, we are going to push up higher. So we're going to hold this for kind of the medium term. Okay, so it could be between three to 7 days, holding and just taking profit incrementally at these levels here as they come up and test. Okay, we'll see how things kind of react at these 2 points. That's where there's stronger resistance. If we manage to break, then we'll be looking towards the $90 range as the last target. Okay, but this is building up on some very, very nice structure. Made a higher low just here, and we're just building up and accumulating. So it's ready and ramping up for a breakout of this high and then on to the next levels. Okay. In terms of copper, let's go over to copper and let's have a little look. We did go in short, slightly pulling back here, but that's fine. We've added some extra lots at the 0.5. So we'll see how things kind of play out. We'll add some more lots at the 618 if it pushes up that high. But yeah, as you can see, we're already finding resistance. So this one's ramping up nicely to come right back down. Okay. So yeah, two very, 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 very nice trades that aren't crypto. So yeah, let's go back to Bitcoin. Let's keep an eye on it. Yeah, where we are pulling up very, very nicely. Yeah, things are looking good. Yeah, this is building up on some structure now, slowly. The gradient isn't out of this world, but again, we are getting structure, ready for breakout of this level here. So today does look promising. That is for sure.
Complexity is one word for it. Another might be friction. There's more frictions from all those sources you identified. Does that inherently mean there's a drag on global growth, economic growth? And specifically, does it mean there's a drag on city growth?
Da, 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 da. Yeah, there's going to be some very, very nice opportunities in crypto today. Some of these altcoins that are on the verge of breaking out, those are the ones that you really want to get in. That have been building some nice structure, compressing in price, ready for that breakout. Because it does look like we're going to at least come and test these highs back here on this breakout of this structure. We'll get a nice pump in some of them altcoins that are ready for it. And then, yeah, we'll have a look whether we're going to get a fake out somewhere just above that structure and then move back in. If we do get that playing out, there's going to be a very, very nice short in opportunity to take advantage of as well. So yeah, today is going to be a busy day by the looks of it. So yeah, obviously the US had its holiday yesterday, coming back online today. So New York Open should see some very nice movement. So yeah, keep a close eye on all of this. There's going to be some very, very, very nice trades on the card.
and they're growing incredibly rapidly. So that's one
Yeah, we're looking good.
growth that we see the biggest opportunities. And you see it in the Middle East as they're looking at expanding and diversifying away from fossil fuels, adding more diversity into their economies. We're seeing it in the extraordinary
So look if we can get anything in the pipeline.
really taking advantage of the trends going on.
Recession, something everyone's talking about, speculating about, nobody knows.
I did like a
I think it's quite possible.
theta long potentially.
Is your view on that changing? Because some of the economic numbers are coming in a little bit more reassuring. Some people, even like Larry Summers, he still thinks it's more likely than that, but he's not as gung-ho on recession as he once was. Where are you?
So what we are seeing is different countries are at very different places. So you actually cannot speak in generalities. We expect to see a rolling series of country recessions, but short of anything crazy happening geopolitically, and this time last year we wouldn't have predicted what happened in Ukraine. You've seen the tails come in, so you've seen the over-optimism from some landings in the economy.
This was such a beautiful trade, such a beautiful trade, and it still does look good. Still does look good.
We hold at Citi is we expect to see a mild recession, largely driven by the painfully persistent service inflation. It's coming off, but it's still pretty high, and we do expect to see central banks continue tightening as a result. But the vulnerability that amplified previous recessions around the world.
I need some structure. Where's the rest of the price action?
Consumer balance sheets are in good shape.
Yeah, 90 does look like a nice target somewhere around here. That's a nice target, 87.9. Very nice quick profit on the cards there potentially. In terms of long-term structure, I mean it's beautiful. It really is beautiful. Obviously, we had this long-term trend line, and it's come down. It's already tested and ready to ramp up. So, yeah, it's one to definitely have on the cards. That's for sure.
Tom, a couple of calls on a recession, mild, off the back of the Andrew Hollenhorst work over at Citi.
The CEOs love to talk econobabble there, and of course she's got great ability from Willem Bouter to Professor Mann, who now is with the Bank of England, on to Andrew Hollenhorst, he's
Very, 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 very nice.
That's not what banking and finance is about. Jane Fraser, folks, is very different than Lawrence Fink, who did the fixed income route. She did the classic strategy route, Cambridge, HBS, the whole route, McKinsey, and now we go spend a cup of coffee at Goldman Sachs, and was brought in strategically at Citigroup to find a new strategy. And what I find fascinating about Citigroup, and Sonali Basak alluded to this on, I hope I remember it was Friday or Thursday, is a basic idea of what now for Citigroup. They have to catch up with a vengeance with the other banks.
Sonali's going to drop by later in the hour. In the next hour, Goldman Sachs, Morgan Stanley results coming up. Just to wrap up earnings on Wall Street, just to wrap up the price action right now on the S&P, we're down about 0.25% on the S&P 500. Talk through some of these stats. 4-day winning streak on the S&P, longest since September. Believe it or not, on a daily basis, quite remarkable. Weekly gain last week of 2.67%, the biggest weekly gain going back to early November. Futures just a little bit softer on the Nasdaq, also we're down 1/3 of 1% there as well. For once, the 2-year last week didn't do much, pretty much flat on the week, down a basis point or two, unchanged this morning as well. On a 2-year, 423.21, on a 10-year, 354.39. Yields a bit higher, the curve a bit steeper, up 4 basis points on 10s, on 30s, up about 5 basis points. And just to finish on foreign exchange, we've talked a lot about that dollar story, haven't we? Dollar index weaker since the end of September by more than 10%. Euro dollar at the moment, 108.
Woo! Oil is flying.
We need to raise rates more. We need to bring them into restrictive territory. That phrase Tom, sufficiently restrictive.
Yeah, we're looking very good on those other trades as well. Very, very nice.
Perhaps they get to 325. Those ECB officials won't be talking about that number anytime soon.
Here we go.
And as we were talking to Elsa Lingos, I think Lagarde is the most
This is pumping now.
bank right now. Christine Lagarde, obviously at Davos, and I think she was in Brussels over the weekend here with huge challenges, including the small matter of a war. And how do you define their sufficiently restrictive versus the easy game of it in the United States?
So at the end of the year, she was blunt. Really, really blunt. Very I've seen with President Lagarde perhaps ever in her tenure at the ECB. And that, Tom, was without the enthusiasm, the optimism that we could escape recession. Since then, Goldman's come out with a call and says we can escape the Eurozone recession. Deutsche Bank going into the weekend saying Germany can escape recession. You'd have to think that if we were hawkish in December with President Lagarde, that when we sit down in February, she's going to be even more so, isn't she?
Yes, I think that's fair. And from the good professor from Ireland, Mr. Lane, you see that. He's very astute. It's good to have Philip Lane assisting the non-economist Lagarde at ECB. We're an hour away. We welcome all of you on Global Wall Street, on radio, on television. Many different stories going on today, and one of them is the continued bank earnings of two non-banks, Morgan Stanley and Goldman Sachs. Devin Ryan's expert of this, owned the high ground for years at Sandler O'Neill, and with JMP Securities, a Citizens company, continues his wonderful work. Are Goldman Sachs and Morgan Stanley, are they banks?
Morning, Tom. So they are banks, I think, increasingly embracing the benefit of stable funding, low-cost deposits on both the consumer side, Goldman now, increasingly transaction banking, et cetera. So I think they're benefiting from that, but they're obviously huge capital markets players. Capital markets have been pretty challenging over the past year, and we're actually looking for a little bit better year in 2023.
In Davos in previous years, we've alluded to James Gorman of Morgan Stanley as maybe being executive of the decade.
CHZ does look good for a short if things turn around. So yeah, let's keep an eye on all of this. FCM broke out, so we're also starting to ramp up, building up on some nice structure. So we'll see how things kind of develop. Seeing a little bit of a pullback here, going back for support, testing for that liquidity, and yeah, just ramping up, ready for that break.
Wealth management, and with the Smith Barney acquisition, that really was transformational. Where now there's such a level of scale, and that's just going to be tough for firms to kind of stick their toe in and try to do that. So we're pretty bullish on that.
You go right where I want to go, which is this idea of scale. Does Mr. Solomon have scale at Goldman Sachs? That seems to be under discussion right now.
Yeah, so clearly the big debate, Tom, is around what's happening in the consumer business. We've actually been a little bit more constructive. I think that Goldman should continue to think about how they evolve and what the bank should look like over the next 20 years. And sometimes the critics, want instant gratification over the next one or two. But yeah, they're coming from essentially a very small base in consumer.
Let's get it. Oil was flying. Come on, let's see if we can get a break. This is starting to look good as well. Potentially add some lots here. Probably look at adding some lots to copper again, somewhere around this range here. If we come up that. This is ramping.
We're more constructive on 2023 than I think most are, particularly the capital markets businesses off of a very abnormally tough 2022.
We're hearing so much more of that over the last couple of weeks. Devin Ryan of JMP Securities. Devin, thank you, sir. Morgan Stanley and Goldman just a little softer in the pre-market, down about 0.4% on Morgan Stanley, down 0.8% on Goldman. Those numbers due in the next 50 minutes or so, TK, to wrap up earnings on Wall Street.
Different companies, and we can wax all we want on the drama of it and the soap opera of it. The overarching theme is everybody wants to do what James Gorman has accomplished. They want to do wealth management because of the persistent fees, the index nature of it, the capturing of BlackRock-like assets, and on and on. And I just, forget about what we're going to see with Ken Leon here in a bit. Going out 2 years, 3 years, 5 years, John, how do they achieve Gorman
Mate, oil is going to make our fucking morning. Come on.
For it. You've got to go out on the buying spree, like Gorman did. And where do you find them
And
right now?
Solomon's doing that in consumer banking, and it's not working out. I don't have the numbers in front of me, but the per account acquisition costs of doing Marcus is difficult.
Well, they're trying to do it organically, aren't they?
Yes,
That's
precisely.
the big difference.
That's very good. That's very good. Very MBA of you.
Is that right?
It's very
Is that what
McKinsey,
they do it? McKinsey
Organically, yeah.
and HBS.
Avocados, bananas, they do it.
What have avocados got to do with anything?
You have breakfast and then you talk
Oh,
about
right.
organic strategy.
Okay, nice.
You like
And
that?
a coffee, and then you move on.
Yeah.
Do they play golf anymore? Is golf a thing?
No, they don't do golf at Davos. We tried that one night at 3 a.m. Barry teed up the ball, and
How did that work?
it was good. Rachel had the 4-iron out, and shanked it. She hit the guy from Coldplay. She hit the guy from Coldplay in the head with a golf
The
ball.
lead singer.
Yeah, he was downfield. And
Do you remember the night I almost broke my hip?
yeah,
Good times. Okay.
I remember being horizontal in a Mercedes. Me, I could barely fit in.
Oh,
with
because
my
you
head
had
in
to
the
lie.
back.
You had to lie across the back.
And I can't remember his name. It was Peter. I don't remember his last name. Peter was in the front seat holding my legs up just to be sure I could get home.
I'm sure that was quite a night, Tom.
It was. Well, the sun was coming up.
7:30 Eastern Time. We're going to catch up with Ken Leon, the Director of Equity Research at CFRA.
Oh, yeah.
Now, so only about 50 minutes away, 49 minutes away to catch up with Ken. Off the back of numbers from Goldman and Morgan Stanley, Charlie Baxter's going to drop by the studio in just a moment to break down them when those numbers come through. Equity futures right now on the S&P. We're down about a third of 1% on the S&P 500. No real drama here.
Can we get that break?
Curve a bit steeper. 10-year 355.
Bitcoin's rampant.
By 5 basis points. And crude with an 80.
Alright, might add some lots to this oil.
Crude of a half of 1% from New York. This is
Looking good. Ba-da-ba-bum.
Keeping you up to
Oh.
date news from around the world with the First Word News, I'm Leanne Gerrans. In the Ukrainian city of Dnipro, rescue crews are still searching for 25 people missing after a Russian missile hit a 9-story apartment building. At least 41 people were killed and dozens more wounded. Now, for the first time in 6 decades, China's population is shrinking. It's the latest milestone in a worsening demographic crisis for the world's second largest economy. Government data says that at the end of last year, China had over 1.4 billion people. That's 850,000 fewer than the year before. The number of births was the lowest since at least 1950. A new report says that international trade will grow more slowly than the global economy after most of the next decade. According to the Boston Consultancy Group, the war in Ukraine will reshape strategic alliances and alter the flow of cross-border commerce.
Here goes. Bitcoin ramping up nicely.
2.3% through 2031. In Venezuela, public sector workers mounted the biggest anti-government protests in years. Workers organized at least 50 protests yesterday. In Caracas, teachers were joined by nurses, pensioners, and others demanding more money from the government. They have been falling behind in an economy that embraced the US dollar. And Microsoft says it will add the virtual artificial intelligence bot ChatGPT to its Azure cloud service soon. The company already has a relationship with the bot's owner, OpenAI, and may take a larger stake. Bloomberg has learned that Microsoft may invest as much as $10 billion in OpenAI. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Oh, come on. Seeing some nice price action here, to be fair. Just need a top. They're going to give it to me here. Make a very nice move, that oil trade.
I do think that the opening up of China, the impulse it gives to consumption in China, energy need, commodity need in China as well, I do think it's a very good signal. It will be supportive of a momentum, but the true inflection point we have not kind of seen yet. We have certainly advised them to go long on China and to be overweight on China.
They're not the only ones. That was Ralph Hammers, the UBS CEO, sitting down with Bloomberg's Manus Cranny in Davos, Switzerland, a little bit earlier on. China GDP coming in better than estimated for 2022, but the economy growing at the second slowest pace since the 1970s. Big banks banning on a stronger recovery in the coming months. Standard Chartered, one of them, Morgan Stanley, another. Bank of America.
Yeah, stronger recovery from China. Not good news for the US.
Several months ago.
I like that. Punchy calls is the right way to put it. And all of a sudden, we're beginning to model out five. And who is it? Somebody.
Oil prices are going to absolutely roof it.
Sat in that chair and said six handle on China GDP.
Yeah, well, there's
And it's going.
here back to something.
It's going.
And the current is acutely it is not the past.
Nearly time, nearly time. Right, we're going to add some lots here to copper. Reserving some for that 618. But here we go. Right.
Well, certainly they are now seeing the end result of that.
Hey, that oil trade's absolutely flying. Come on. Give me some more.
Population has shrunk for the first time since 1961 when China had a great famine, of course. It is the legacy of that one-child policy that did change over the past decade or so. Two-child and a three-child policy, and of course now the authorities are trying to encourage people to grow their families, to have more children. They're offering subsidies and the like, and obviously it's going to become a pressing concern for them because the working age population is shrinking. There are more deaths than births. Of course, we're also in the middle of this public health crisis. We don't quite know what level of fatalities China is experiencing. So it's a much more important structural negative for the economy than the day-to-day headlines around the COVID-0 impact.
Well, it's so important. And then for those of you on radio, the slope, the degree of change of births in China is pre-COVID, and it is stunning.
Let's get it.
Mathematical word. I hope that John Farrell will let me use the word stunning. And the current, what do they do as a social policy to increase births? Is it a new safety net that Xi has to come up with?
Well, they are trying. They're talking about.
Right, let's see how this copper trade develops as well. Oil trade's very, very, very nicely up. Very nicely up. It is. We kind of do need that break. It does look like it's ramping up very nicely. Very nicely.
Marrying later, all these social trends are weighing against expanding families in China, and that's now really coming home to roost, and I think is going to be a major headwind for economic policymakers in the years ahead.
John, look to the northeast, Japan, Korea. That's what they're worried about.
I want to finish on population growth just briefly. Andrew, I wonder what's more important here, the overall population growth or the urban population growth? Andrew, is the latter a little bit more important? Is that what you focus on?
Well, it's the labour
that you really focus on, John. It's, as you say, it's not really the absolute size of the population. It's what's happening with your labour force. How productive is your labour force? How skilled and how educated are there? I mean, there's an argument saying that it's not necessarily about where the headline rate of employment is going for China. It's what are they doing with those who can work. And of course, the workforce in China is shrinking, and that's what's really alarming people. And the concern is that they are on a similar path, like Tom just mentioned, to other neighbours in Northeast Asia.
Chinese Vice Premier Liu He speaking in Davos, Switzerland at the moment. Tom, here's a headline for you. Life has been restored to normal in China. Life has been restored to normal in China. That headline just crossing moments ago.
And is it normal?
I can't speak for all of China.
We are ramping up very nicely.
In Hong Kong, airports reopened, the crossing in the Shenzhen is reopened, but people, there's still a fairly subdued feeling here. I think we need to get over Chinese New Year and then see what the mood is like then.
John, I just think, you, me and Lisa in Hong Kong.
You want to go?
I just think it's a celebration
I don't know if
of
I'll
our
get,
team in Hong Kong.
I don't know if I'll get
so hard.
the invite, considering the question I'm about to ask. He also reiterated China opposes unilateralism and protectionism. Enda, can you make sense of that for me? How could a Chinese official seriously come out and say that they oppose protectionism?
Well, quite right, John, but this, of course, we all know what the backdrop here is. The Chinese officials have typically used Davos as a platform to sell itself to the rest of the global economy, that they're open for business, that they operate by the rules of the international liberal rules-based order and everything else. And this is a line they've trotted out before, but of course, it's specifically being aimed at the US. They are pushing back against those tariffs. Remember now, he's going to be meeting the US Treasury Secretary over coming days. You can be sure part of that conversation will be tariffs on Chinese goods. So I imagine he's just setting a bit of mood music ahead of those folks.
He knows his audience. And a thank you. And a Karen over in Hong Kong. Thank you, sir.
Na na na.
Just move music.
My answer
Come on, oil.
is usually they play football.
Give me a nice push.
Is that your favourite?
Push,
No, it's not
push,
my favorite.
push.
That's what they play. That's the mood music.
Opening up is a key driver of economic progress. China will always promote all-round opening up. That's the kind of thing the West wants to hear in Davos, Switzerland.
It's
And
like
then
what
Tom,
Mr. Fink was
and then
talking about.
TK, what happens exactly? What happens off the back of it?
Well, everybody goes home and tries to make the next marginal profit dollar down the income statement. That's what they.
Are we really going to take headlines like that at face value? That
No, we're not. That's our hallmark, John. No, this is what we've done for 20 years. John hits the third rail here. This is what we've done for 20 years. Is we don't take it at face value. We respect that they go. I respect that they go there. I love beating up on David Rubenstein just as an example, but he dishes it right back. These guys, that interview we did with Moynihan there a year or 2, 3 years ago, that was on
several years
fire.
ago, yeah.
We talked to a banker about banking. That's what That's what they don't. They want to talk about hope and
Do you remember? I remember when President Xi, the leader of the Communist Party,
place stopped.
and China spoke to the audience at Davos. He was that big
Place stopped.
speaker, and then all these articles came out that China was kind of the new flag bearer of the global liberal order. I mean, what on earth was that nonsense about? And I've been there. I've been on both sides of the wall. Been inside the World Economic Forum, outside the World Economic Forum, and just sometimes people seem to get carried away with what happens there. Don't you think?
Yeah, I've seen you outside the wall there. Those 2 hockey players, really good hockey players. They got their place down there. They go from DLD in Munich and they come up to Davos. There's a whole Davos, folks, outside of the World Economic Forum. Shh, don't let them know.
Oil starting to go back up.
Davos going on right now.
Give me that break. Come on.
It's a lot of people on business and building relationships and all that, and there's a lot of hangers-on, just like you'd think at like a rock concert or something like that. That's sort of maybe very crypto-y and that. And then there's a lot of other people just there to be there, looking to make 1 or 2 relationship contacts. I mean, I get stopped in
Ramping up.
constantly by
Looking good.
who they are. Usually
See if we can get that break.
And you're never bored.
No, I don't. I have my crampons on. I got the little, sticky mouth.
The spikes.
Spike.
The
Yeah,
boots in.
I wear them for like 5 days straight.
I've never seen them.
Mm-hmm.
Okay. All
They're
right.
on a set
Should
too.
we leave that conversation now? I feel like that's died.
Yeah.
Equities right now
Yes.
on the S&P down 0.2,
shows
1%. Coming up, Chris Harvey, the head of equity strategy at Wells Fargo Securities, going to join us in just a
Important
moment.
conversation.
Look, on the road ahead, we've got Mike Wilson and Morgan Stanley out early this morning,
Yeah.
basically saying, and I love this line from Mike Wilson earlier this morning from the team
Yeah.
at Morgan Stanley, bear markets are like a hall of mirrors designed to confuse investors and take their money. Isn't that a great line?
is, John, we're about ready to round it up. $86 Brent crude. Is that the backstory 4 days from now in Davos?
Goldman, you saw what Goldman said and Jeff Curry, didn't you? They see a bullish concoction. A bullish concoction.
That's Chicago talk.
Commodities. Is that what that
That's
is?
what Krasner would say.
You're going to try and catch up with Jeff later this week, hopefully.
Yeah, we hope so.
Try and
We're
make
working on
that
it right now. A lot of good oil voices to talk to, including our Javier Blas.
Cool, very cool. Okay, so coming up shortly, Chris Harvey of Wells Fargo to break down the equity market. In the next hour, you'll get results from Morgan Stanley and from Goldman Sachs as well. Shanali Bassett's going to drop down the studio and bring you the latest numbers on all of that. We'll tie that all together and push forward to the tech results as well.
Just come down.
Welcome back from a long weekend if you're joining us stateside. In the equity market at the moment, S&P 500.
Right, if copper pushes up to 618, some nice resistance here. We'll add our final lots at this level here. So, yeah, we'll see how things kind of react as they enter this range. But this will be our largest lot size and final lot size that will be added at that point, yeah. So I'll keep a close eye.
The New York Fed's John Williams, Tom, giving some welcoming remarks. A little bit later, we'll see if he talks about monetary policy or not. Live from New York City this Tuesday morning. Good morning to you all. This is Bloomberg.
Right, I've opened an order on copper to add lots just in this range here. Okay, so starting 4.174 and the very top at 4.185. Okay, so should automatically tag us in for those extra and final lots at that price. Hopefully we get a turnaround at that point. If not, then we move on to the next one. This oil trade is looking very, very, very nice. Just need that break. It's kind of holding onto that level, which we'll see whether we can get that push.
think long term.
If we do go into a recession, it will be a mild one. Consumers still seem to be spending. The labor market still seems to be strong.
Could have goods deflation this year. That is a very different story to last year when US inflation was accelerating.
Come on, give me some movement.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Later this hour, wrapping up earnings on Wall Street with Goldman and Morgan Stanley, live from New York City this morning. Good morning for our audience.
Dollars rejected, pushing right back down, so we should see a nice ramping up in prices. Yeah, let's see if we can get that breach. Yeah, that breach breakout. Some of these altcoins are going to fly. I'm cash in for the day. Be very, very nice. Oil's back up on the run. Looking good. Again, guys, anyone that's just joining us, we're adding lots to the copper short. 4.174 and between 4.85. Sorry, 4.185. So just in this box here. That's the 618 as well. So we've got some nice resistance at that point. So should be a nice turning point, if not already turning at this point. I mean, we're at that 0.5. We've added some lots at this level. So yeah, let's see whether we either hold, turn around here, maybe even potentially start building up on a top here, maybe, and turning back around. If not, we'll put breach, push up here, and then come back down. Yeah, not looking too bad on that. So oil continues to push up higher.
Risk assets go up from here. Bank of America with a fund manager survey a little bit earlier this morning saying exactly that. The pain trade is that this continues. I mentioned Mike Wilson and Morgan Stanley. Here's the note from Mike this morning. Here's the full note, the full quote, the lead paragraph, and I'll get to Chris Harvey of Wells Fargo on his view on this. Bear markets are like a hall of mirrors, designed to confuse investors and take their money. He went on to say, trust your fundamental process for us. Margins and earnings are likely to significantly disappoint whether there is a recession or not.
And what's important here is the timeline. Mike Wilson's idea of long term within, the structure of a big Wall Street firm is, I'm going to say, 6 months, 9 months, maybe a year. What do you do, John, if you have a longer term time frame, 3 years, 5 years, coming out of a pandemic, China reopening, you've had this nice gift of a lift, then what? And that's sort of where we are going into February.
Let's do some of that right now with Chris Harvey, the head of equity strategy at Wells Fargo Securities. Chris, let's start there. Bear markets are like a hall of mirrors designed to confuse investors and take their money. Is this a bear market rally?
Bear market rally. This is a rally, no doubt. Has a lot of the hallmarkings of a January effect, as you were pointed out. Credit spreads are tightening, high yield, IG, but risk is rallying, smaller caps are rallying. I don't know if I'd call it a bear market rally. What I think is we're probably going to begin to stall out here. We think fair value in the short term somewhere around 4,000. And at the end of the day, it's true that but margins are going to compress. EPS is going to come down. But we think we're really facing more of an economic malaise than we are some sort of sharp recession.
Come on, give me that push.
You have to be careful. You have to place your bets. We think mid-cap growth is that sweet spot. And overall, the broader market's a little bit tough. We think things will trade higher, but you can see a pretty big downside from here.
So, Chris, within that, there was a call on the economy and there was a call on earnings. Can we just separate the two just for a moment and focus on earnings, Chris?
By the way, guys, those that are in this stream, how's the input on the mic? Is it okay? Do I need to turn it down? Just because I did have some issues with it on that risk management video. So if one of you can just let me know that the input's alright and I don't need to change it, that'll be great. If it does need altering, then yeah, please do let me know so I can amend it correctly. Awesome, really good. Alright, beautiful, mate. Thank you very much. Yeah. So,
nice note. You speak of a tactical shift.
Seeing some nice movement.
I get that there's been a tactical shift. Everybody's gotten this mother of all recession.
This oil trade is ramping.
Help me with April or May is June. How do I prosecute tactics now to survive in the second quarter?
Tom, that's a great question. And that's a question that we're having with a lot of clients. We have a lot of clients that performed quite well last year, come into this year, and they've just got to turn over. And what they're saying is, hey, do I turn? Do I shift? Do I tactically move? And our answer is no.
So all the altcoins are starting to turn green. I'm going to see another push up higher. I mean, dollar index is looking weak. 45 minutes, go to 1 hour. Yeah, this is starting to break down. Looking good. Looking very, very good.
Chris, the financial media is guilty of this, and frankly, Bloomberg and myself, we're as guilty as anyone of a complete focus on the big banks, in what Wells Fargo's doing and the rest. Okay, great. After the big banks, which earnings?
Here we go, potential break. See if we can get that move.
We're looking at cyclical earnings because we think that's where the pain is going to be, right? Cyclical earnings, the old economy stocks outpunched their weight last year, and that's where we think the pain's going to be. If you're going to believe that the economy is slowing down, which we do, that's where you should see most of the pain. That's where we should see the
Starting to get a little bit of a top here on copper. This is a high area of resistance, lots of orders to be broken and tapped into here. And by the looks of it, as you can see, these buyers are weakening as we are pushing up. So we got that divergence. Yeah, it's cranking up for a turnaround. Commodities today is, well, it's a very nice day to be trading commodities. Very nice day. So we got breach. So on the lower time frame, we want to break through that top there. If we manage to break, then we're on to the next levels. It's looking good. Could even potentially see that break, close, come back down, test, push back up. So keep an eye for that structure to build up.
Does tech come back? And what we think is it's going to be a lot more idiosyncratic market. Don't look so much for this one big trade or this one big knockout. Really get back to the fundamentals. Look for that good risk reward. Again, we think it's in that mid cap growth space, and you can get some good valuations down there, 15 times earnings or so. And don't focus so much on the macro.
Okay, well, that's great. I'm focusing right now on S&P 500 up 4.2% in 9, 8, 10 days, whatever we've had this year. Are you going to give me a double-digit return in 2023?
So what we think in 2023 is ultimately you're going to get to 4,200. You're going to get to 4,200 because we think rates are going to come down. We think inflation is coming down, and we think the economy is slowing. And what is that? That's a growth market. And what is the S&P 500? That's a growth indice. And at the end of the year, even if the Fed doesn't cut, which we don't think it will cut, the market will believe that it's going to cut, and we should see that reflected in the shape of the yield curve and interest rates.
So I'm going to Chris on this. This is the heart of Bloomberg surveillance. Do we have two opposing views here between what we see from Wells Fargo and what we see from Morgan Stanley? Couldn't be farther apart.
Are you talking about the path or point to point?
Both.
Because the shape of the path, I mean, Chris, didn't you talk about a potential for real downside here? In the near term, at least?
That's right. We think there's downside to 3,400, but ultimately you do recover, right? We do think that that we end up higher. 4,200 is the high for this year, and we do think we get there. We think that, again, what you're facing is more of an economic malaise, not a sharp sell-off, not something that's going to be horrific. And as a result, we can muddle through that. And let's not forget, the Fed is going to, or we think the Fed's going to stop raising rates sometime this year. That's a positive. And if we get through a situation where it's more of an economic malaise than a sharp sell-off, then earnings, they'll be dented, but they won't collapse.
Hey, Chris, enjoyed this. Thank you, buddy. As always, Chris Harvey there of Wells Fargo. So point to point from here to year end, looking for 4,200, looking for downside to 3,400. Tom, I can tell you, Greg Bowdle over at BNP Paribas, he thinks we end the year there, 3,400 on the S&P. That's your range of calls out there at the moment. The average, if you want the average, average, Tom, for year end? It's just north of 4,000.
I really thought about this a couple hours ago. I mean, being a strategist right now is
Sucks.
You've got a supply side. That's a nice way of putting it. You've got a supply side. Seriously, you got a supply side shock in an historic moment, a once in a lifetime pandemic, and you're supposed to game economics and central bank dynamics with a fixed income market always placed before equities. Bring it over down the income statement to the revenue line, and hopefully the distinction of profitable and non-profitable companies. It is a really difficult.
It's really difficult. I keep going back to this, Tom, and it depends what seat you sit in. We can have a conversation about what is good versus what is bad, and we can have a market conversation about what is getting better versus what is getting worse. And I think capturing that this morning was the fund manager survey that came from Bank of America. First line for you, Tom, in this quote, and that 50% of fund managers.
Let's get it. Let's get it.
That's not good.
Here goes. Here goes oil.
It's better. This is actually the most optimistic FOMS investors have been on global growth prospects in the past year.
Hey bro, I'm a new trader. Love the content. Feel like I'm learning a lot. Is there any tips you would give a new trader like me? Right. So, if you are brand new, the best thing that you can do is literally get the fundamentals right, and just learn the right way from the get-go, in the right structure, and keep things simple. There's no need to overcomplicate things, especially when you're brand new. It can be quite daunting. So yeah, literally keep things nice and simple. Just learn the basics and really get the basics on lock. Get used to trading on a smaller account, okay, and get used to basically getting those fundamentals right and correct on a smaller account, ready for compounding, long-term mind frame, and building up to being able to basically function with a larger account. The more money that you have in as capital to trade, more emotion to stick to it, so it becomes much harder. So as long as you're able to get the fundamentals right, okay, so your risk management needs to be on point without a doubt. And kind of just understanding yourself as a trader. So what emotions, setting yourself trading rules, and yeah, just learn. Take time to just learn the right way, and then practice on a demo account, or and kind of once you kind of get the basics in terms of understanding right how to put a trade on, and kind of the dynamics on an exchange and working with the exchange and understanding how things work, then go in and trade on a small amount of your own money, not too much. Now the point is kind of understanding what you consider to be a small account, okay, and go with that figure. Don't go with something that you're just going to have emotions attached to it. So don't put too much money that you can't afford to lose. And yeah, just take the time, learn, read books, watch videos on traders if you are able to. Instead, and this is where a lot of people go wrong, instead of putting money into a trading account and learning the lessons in the hard way, okay, by losing money, and doing that over and over again, and potentially ultimately actually putting yourself off from trading, okay, just spend some money, okay, on learning, okay, on material. That's the best thing that you can do. If I could go back, yeah, I would have spent a lot more time and funds on actually just kind of learning different strategies from people. But you can also get and learn quite a lot free from YouTube. YouTube's great, Trading View is great as well. But again, it's also filled with a lot of stuff that's not great for you, and you can pick up bad habits on, and that's the problem, is building up and picking up bad habits, and if you're trying to do things free and just learning by yourself, you're susceptible to building up very bad habits. And once you get those habits, it's very, very difficult to get out. Very difficult. But yeah, also long-term mindset over short-term mindset. 3, 5, 10, 15 year horizon. That's the way that you should be looking and treating trading. Not something that's going to be for a few months or within the year. That mindset is just going to absolutely kill off all the funds that you put into trading. Low leverage or no leverage at all. Yeah, for a new trader, yeah, 100% completely agree. Just get literally probably that. I mean, for very new traders or just new traders, I've got less than 2 year experience. Yeah, no more than 20 times leverage, and really get used to calculating out how much margin you should be placing. Yeah, 1% of your account should be going on a trade, giving yourself a bit of leeway in case you want to enter 1 or 2 more trades after that. For new traders, just stick to 1 or 2 positions at a time. Again, it's about simplicity. Okay, when you start overcomplicating things, it's just going to go out the window. You're going to get very emotional. Yeah, no good. Don't let the market control your emotions. Yeah, 100%. Yeah, emotions is definitely a main part to it. Yeah. There's a lot of free content on our YouTube channel. If you go over to our playlist, there's a whole load of educational content on there. So feel free to go and watch them. There's 2 playlists. There's one specifically for beginners, and there's another one that's kind of the next level up. So yeah, feel free to touch base on those playlists. It will definitely help you out. For a beginner, it's all about mindset, emotion, psychology, risk management. Those are the fundamentals that you kind of really need to get on lock.
The Prime Minister of Netherlands, Mark Rutte, and this is, of course, they're going to talk about Ukraine. Netherlands has sent about $3 billion. Potentially, there's going to be another billion on tap. It comes on the heels of his phone conversation the past 24 hours with President Zelensky. But also, we spoke about the last hour. Also on the agenda is the fact that the U.S. wants to make sure Netherlands is.
Come on, Copper, come down. Make me some cash.
To China. This is a big deal in Netherlands because one of the crown jewels of their economy is ASML. So this is an important.
So, okay, we got a nice breakout. Okay, we come retested here. We'll see how this candle closes, but it does look good. Obviously, we got this next level to test out. But yeah, we are looking good here. Things are starting to ramp up, and that's exactly what we want to see.
How does the president adapt and adjust to what we saw this weekend with a missile that can take out an aircraft carrier?
Yeah, and also, of course, that civilian infrastructure saw rise again this morning and included a number of children. Incredibly devastating images, absolutely horrific, to be frank, coming out of Ukraine. I mean, the president, the United States has recently sent a number of advanced equipment, including the Patriot missile battery. The news really over the last 72, 48 hours.
Woo! Right, that copper is coming right in profit as well.
Stepped up on Germany to send also Leopard tanks. So I think those images are going to dictate and maybe push some that are still waiting on what they potentially may or may not send.
Right, here goes Crypto.
Potentially sending those weapons.
What a time for a conversation with Chancellor Scholz a little bit later today.
Got some nice movement on some of these.
John Micklethwaite, AMH Anne-Marie, over in Washington, D.C. Anne-Marie, thank you. This from City's Andrew Hollenhorst, Tom, just moments ago. I think Jane Fraser referring to some of his work in her interview a little bit earlier on this morning with David Weston, Tom. Our base case remains 50 basis points for for the February meeting, despite the modest probability being priced. We think policy rates end the year comfortably above 5%, in contrast to this market.
We got data out to February 1. I'm going to say what I said before. People make fun of me about it. We're massively data dependent for retail sales, the dynamics there of the control sale, and just at all, we're data dependent. That's all there is to it, between 50 and 25 basis points. Right now, we're very data dependent.
Waiting for some data out of Goldman Sachs, and it drops right now. The fourth quarter EPS coming in at 332. I'll get you a comparison to the estimate in just a moment. Net revenue 10.59 billion.
Can we get a break? That's what I'm looking for. I mean, we are looking good. Very good indeed.
The estimate 178.67 billion. We're looking for some of the trading numbers, as always, with Goldman Sachs. Shonali Basak alongside me, looking for the same thing. Hey, Shonali.
Listen, they just came in blowing through estimates. When you look at the trading data, it's interesting.
Da 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 da.
Whether you can keep on inking $3.5 billion a quarter in the fixed income unit. Remember, that is a much bigger number than we're seeing over at peers. You also see Goldman Sachs coming in above line when you look at the equities trading revenue. When we look at Morgan Stanley, we're going to be watching for another quarter if Goldman is coming in ahead of them on that regard. We're looking at net revenue, however, overall coming in a tad shy of estimates, John. So when the rubber hits the road for Goldman Sachs, are they going to be judged on the core businesses that they come on beating on very strongly here, or are they going to be judged here on some of these moonshots that they are looking to now reorganize quite a bit?
Well, let's talk about the different parts of the bank, Tom, just briefly. Fourth quarter IB revenue comes in at 1.87 billion. The estimate 1.64 billion. Unsurprising, Tom, given the year we had in markets last year, bonds down, equities down, to see this line, significantly lower revenues in asset and wealth management.
Well, they're going to partition out, and that's what they do, folks, in a PowerPoint. I mean, I'm looking at 14 pages of data in detail here. Shonali, do people look at this as a normal analysis day, or is it completely focused on Mr. Solomon's consumer experiment?
There's a lot of questions about the consumer experiment and where they make money from above and beyond that. So the asset and wealth numbers increasingly important as we truck along here. Now, to the point that you're making, this is a tough business for everybody. But at the very, very end of the day, no matter if you're playing an asset or playing consumer, let's talk really quickly here about the ROE number. The number that we're looking at here of 10.2% is well above estimates. The expectation was 7%, but you are watching Goldman Sachs come down to earth quite a bit. Remember, last year they inked a number there at 23%. So what is normal for the Solomon era? The medium-term target is 13%.
Come on.
Contrast the numbers we're seeing with the decisions that they're making in the C-suite at the moment. Compare and contrast this report to some of these severe cuts we're expecting to the workforce.
You know, it's funny. I was looking back 5 years this morning just to kind of reminisce about efficiency ratios over at Goldman Sachs. And the reason that's important here is because Goldman Sachs is more efficient than Morgan Stanley. Their numbers are better on efficiency. However, because the ROE is not coming in as hot, you have questions about how you bring that overall profitability up at Goldman Sachs. The reason I bring this up is because those 5 years ago, you did not see that efficiency number posted at the top of the release, and now you certainly do. So those cost cuts are very important over there at Goldman Sachs.
I want to bring up
Seen a nice turnaround here on copper. Coming into very nice profit as well. Today's a good day. This is ramping. Let's see if we can get a nice push. That's ramping up as well. Very, very, very nice.
Of net revenues. We're talking about Marcus and the rest of it like it's 30% of the bank. It's a rounding error. Why are we so upset if it's 3.17% of revenues?
That is the favorite question.
Da, 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 da.
There was a presentation earlier last year that showed you that $100 billion in deposits they had brought in through that business also changed their funding mix quite meaningfully. So to the point, it's a small business. It loses a lot of money. We had a banner below showing the provisions for loan losses at that business. That is part of the costs in addition to the overall cost you're seeing at that business. So yes, that's why I was saying, Tom, that this asset and wealth management business becomes all the more important. And if you look at it, even though you see pressure on the fees, you do see the business come in above expectations on revenue at asset and wealth.
Are they going to be organic in wealth management, or are they going to do an Eaton Vance? Vance. Eaton Vance, folks, is a wonderful Boston shop that Mr. Gorman picked up. Can they find an Eaton Vance, or are they going to grow?
Alright.
Well, it's interesting. There's a young chap there called Julian Salisbury, and the focus there for him is not just what you're seeing over at Morgan Stanley, passive, 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 starting to float into all these banks. But there's a line here that talks about their private investments, equity, debt.
Right, we're going to take some profit here.
Decrease in debt investments.
Why not? Just get out of that shit.
Goldman Sachs look a little like KKR. They're focusing on private markets over at that asset manager. It's a competitive business, it's a higher fee business, and that's why it matters.
There's some people who want to be paid a little bit like maybe some people at KKR as well. That stock Goldman's down about 1% in the pre-market. Your broader equity market still down about 10 to 1% or 2 on the S&P 500.
We'll take that.
One still to go. Morgan Stanley. Shanali's not going to go anywhere. We'll break down those numbers when they come through, and we'll catch up with Ken Leon, the Equity Research Director at CFRA. All of that still to come. Equities down, as I say, but trying to recover by about a 10 to 1% on the S&P. Alongside Tom Keene, I'm Jonathan Ferro. This is Bloomberg Surveillance.
Moon. Mate, I need this to turn around. We're getting it. We're getting it. Let's go. 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 Give me that break.
1.7% in the pre-market. I'll keep an eye on that for you. Morgan Stanley earnings still to come. Shinali Basak alongside Tom Keane and myself. We'll break down those numbers for you.
Up and down, up and down, up and down.
500, we are negative by a little more than a tenth of 1% on the S&P after a 4-day winning streak on the S&P 500. On the Nasdaq, down about 0.2% in the bond market for once last week on a 2-year. A little bit of a snooze. Your 2-year right now, 423.21. Getting some numbers from Morgan Stanley at the moment. Fourth quarter net interest income, 2.32 billion. The estimate 2.5 billion. The all-important wealth management net revenue number, 6.63 billion. The estimate 6.14 billion dollars. Going through some of these numbers for you, as I say, Shinali Basak alongside us. Shinali, what do you see?
I think one thing important here is the fixed sales and trading revenue missing expectations. When you had Goldman just come out with not only a beat, but the biggest jump on Wall Street at 44%. So what are they going to do over there to get competitive in fixed income? The other question I have is about equities sales and trading revenue. You have it come in below expectations at $2.2 billion just about. Remember, that is the king on Wall Street typically coming in higher than Goldman Sachs.
I'm struggling to really break out. I'm seeing some more supply being dumped here. Not that it's a whole load, but yeah, the buyers not looking too strong.
In a tough market for equities, but also because remember we had Jonathan Cruzan over there on his way towards stepping down this month over at Morgan Stanley. Puts a lot of pressure and a lot of spotlight on the other two major deputies here, Ted Pick over at the trading desk, as well as Andy Fowler over at the business, as we've been talking about getting more and more competitive by the day.
I look at the return on ROTCE, return on capital, and some of the other measurements here, and the answer is they're just simply more profitable than Goldman Sachs. Is that the short answer?
They aim to be is the question here. In a few minutes here, we'll also look at the post that they put out for their strategic objectives. They tend to do that at the end of the year to see if anything has changed. But if you look at their medium-term goals, they are in line at the high end of the range. They're higher than what Goldman Sachs has targeted to give you. But today, at least, they're not, Tom. They're slightly below in return on equity where you see Goldman Sachs.
And to their credit, John, like all the banks, are really getting much better clarity on these releases of tons of data. John, a single sentence. The wealth management business delivered 6% full-year annualized growth rate from the beginning of the year. Now, I believe the stock market was down 20%. I believe the bond market was down 14%.
Battered.
I think I'm impressed. I don't know how that's adjusted for Eaton Vance or E-Trade, but maybe I'm impressed by that plus 6% statistic.
Morgan Stanley, the stock is down by just 0.4% in the pre-market. Mentioned Goldman down by 1.9%. Goldman reporting about 15%.
By the way, guys, those that are not in premium, tomorrow we are officially unbanned from TradingView, so we will be back to posting some content publicly. Now, it won't be going back to normal levels, okay? We are going to keep a lot of the stuff either on YouTube or strictly for premium members. But yeah, we will be posting some updates back on our TradingView account. Basically sharing some love back to that community. So, yeah, it's been a long month to say the least. But yeah, market updates. We'll do one live stream on TradingView. The rest is all going to be on YouTube. Yeah, they're way too restrictive. So, fuck you, TradingView.
I do agree, but I will say that their clarity of presentation, I was a huge critic 5, 6, 7, 8 years ago.
You've upgraded them.
No, I think they've really listened. They're like in English. I mean, anybody can look at this with over their sophistication and get a feeling for the distinctions between the two.
When you say they've listened to you.
No, they listen to Shinali.
Oh, they listen to Shinali.
Yeah,
The feedback. Okay.
All I can say when
Shinali's a power on LinkedIn. I mean, she publishes for LinkedIn, and Global Wall Street stops.
Are you on the distribution?
I never read it, but I'm in the distribution.
My inbox.
you read it, I see who picks up.
Do you want to promote?
Oh, you do? You see that I ignored you.
I'm taking
Would you
score.
like to promote your newsletter?
People should read it. It definitely goes in the inbox straight to everybody. But listen, the one thing I would say, when times are good, no one's hiding behind each other. As far far as reporting on the same day. When times are tougher is when you see everybody come out in chorus and tell you, hey, things are bad in this business. And
We've gotten such good help over the years from Kenneth Leon.
Come on. That oil trade's looking juicy. Juicy, juicy, juicy.
Of these challenges, particularly as James Gorman and his team break out equity, what I'm going to call underperformance collegially. SPACs blew up. I don't think SPACs are coming back. How far out is the equity weakness that we see in the different banks?
Well, I don't think anyone's going to predict the first quarter, but equity will come back. The market will look maybe to the second half, but there's a lot of more here in terms of Morgan Stanley versus Goldman Sachs on who has the right strategy.
It's holding nicely.
Shareholder value, and we think it's Morgan Stanley. I think Goldman and David Solomon are under big pressure. They got investor day 4 weeks ahead, and the question then is, who does there's certainly not going to be a consumer.
Yeah, we are starting to move down slightly here.
Billion operating loss in their platform new segment, including consumer. And if they're going into private equity or asset management, they're going to have to make an acquisition.
I look, Ken, at the acquisition. Great. We talked about this before. Do they grow it organically, or do they look at an acquisition a la Eaton Vance? Is it out there? Is it active? Or is it an index manager?
Scale really matters. And again, James Gorman at Morgan Stanley, he not only got into the deals, he got into and workforce 401k against Fidelity. Goldman,
Come on, Copper. Give me some in.
and they can get there in getting to. Goldman always wants to be top 3 in league tables, and to do that in private equity or asset management, they're going to have to look beyond organic. That puts a lot of pressure on David Solomon to drive shareholder value. No one really cares about fixed income trading in the fourth quarter, and the market never gives you a higher multiple for trading. And then you're left with an agent business as the best investment banker, but you're still not going to get the multiple of a BlackRock or a Charles Schwab.
John, let's call it the Leon urgency right now. I'm looking back at the great financial
Come
crisis.
down, come down, come down, come down, come down. FTM starting to ramp up as well.
At the bottom of the pandemic. Goldman Sachs up 165%. Morgan Stanley up 243%. The Gorman Delta.
So Ken, let's talk about valuations. Relatively speaking, it appears to me that you think Morgan Stanley should have a premium over Goldman. That's the relative story. Can you talk about the absolute story for the whole sector, going into what people anticipate will be an economic downturn potentially this year? Ken, how do you think they should be valued?
So we at CFRA think financials could outperform this year and outperform the S&P 500. Also, there's other areas of the financial sector like insurance that did well last year. You need the banks. You need both the large and the regional banks to outperform. And if we have a Goldilocks economy with net interest income rising and stable loans, that's pretty good. When you get to investment banks, you need a risk-on versus a risk-off environment. And to my point before, we're not going to be there in the first quarter, but all of a sudden, those stocks can take off, but we just don't see it near term.
So Ken, there's two ways of explaining this. One is a call on the economy, that you avoid the economic downturn. The other is a call on the quality of the institutions, the defensive nature perhaps.
Sorry, I missed that. What do I get for free? It's since you're in premium, you get everything. I was just talking about we get unbanned from TradingView tomorrow, so free members will obviously start seeing some content going into the TradingView account again, because obviously we got banned from public posting. But yeah, you get everything that we do anyway.
The only way that they're going to drive shareholder value.
Ken, thank you. Ken Leon there of CFRA. And Ken, thanks for everything over the last couple of days as well, with us on Friday, breaking down the bank numbers. Goldman, Morgan Stanley.
Alright, these two trades are looking very, 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 very nice.
I would also say whatever they say about headcount and compensation will be important. You are seeing headcount up
10% over at Goldman ahead of those cuts. You are also seeing Morgan Stanley saying compensation is decreasing despite higher headcount. So
That's holding on to quite nicely, actually.
Up 10% just before they're about to cut. By what, 10%?
7. So net, your headcount is still rising on Wall Street. You're just getting paid less for
What
it.
do you make of that, Tom? Just those numbers on hiring, on the labour force, Morgan Stanley, Goldman.
My answers go of all this of the last 3-4 days of banking ballet. Everybody's got a plan. Everybody's moving forward. Moynihan, all the rest of them. Goldman Sachs is at a different point, and I'm with Mr. Leon that the urgency here. I've said that. I don't think anybody's surprised that I'm saying this.
Charlie, brilliant work over the last couple of days. Thank you. We'll catch up with you in the 9 o'clock hour a little bit later this morning off the back of these numbers. Goldman right now down by about 2.3% in the pre-market. We have a plan for the next hour. Neil Dutta, the head of US economic research at Renmac, Renaissance Macro Research, is going to join us. Is that in the studio, Tom? I hope it is.
I hope so. He's nearby here. He was going to come to Davos to see us, but he said if you're in New York, he'll come to New York.
Yeah. Did he miss the flight too?
He missed the flight.
That's what happened when you order that extra round at Newark. That's what happens. Flights get missed. This is what happens, Tom.
Yeah, it happens, and they tried to get me there. They gave me the car from one plane. You come down the plane.
Oh, like the fancy service?
Car.
Fancy service, yeah.
Even with that, I couldn't make it.
Couldn't get there?
Well, I travel with 6 suitcases, so that was
you
the
have
problem.
those mental ones with stickers on, I've seen it.
Yeah.
What a scene.
The luggage was
Got to
just
update
too
you,
much.
Tom, to something a little bit.
I cut back. I used to take 7, 8 suitcases to Davos, and the walk up the mountain from the train station is so bad.
Was anything in them, or did you just like to
No,
see?
I take them to bring swag back and,
like free stuff.
Free stuff.
Goodie bags.
The free stuff's great. The box of chocolates that you get is Dr. Schwab sends you a box of chocolates.
Yeah.
Pretty good.
I remember the Bloomberg Davos chocolate. That was pretty good.
Yes, it
Those
was.
special bars we
Those are
make up.
milk chocolate. Yes.
Nice. Okay. Neil's coming up in about 50 minutes. Look out for that.
Go on.
0.2%, and I heard a rumour that maybe we'll catch up with Bramo next. He's going to release the service.
Oh, that's okay. She's up to crack at 2 p.m. Wonderful.
Good for her. From New York. This is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. Russia wants to boost the size of its military to 1.5 million personnel and create new command areas near Europe. The Kremlin says that's in response to what it calls a proxy war being fought by the US and its allies in Ukraine. Russia's military currently has a target level of more than 1.1 million personnel. For the first time in 6 decades, China's population is shrinking. It's the latest milestone in a worsening demographic crisis for the world's second largest economy. Government data says that at the end of last year, China had over 1.4 billion people. That's 850,000 fewer than the year before. The number of births was the lowest since at least 1950. A new report says that
Come on, copper.
will grow more slowly than the global economy over the next decade. According to the Boston Consultancy Group, the war in Ukraine will reshape strategic alliances and alter the flow of cross-border commerce. The report forecasts that trade will grow at an average of 2.3% through 2031. Emerson Electric has gone public with its pursuit of National Instruments. It's revealed a roughly $7 billion bid to take over the maker of measurement systems. Emerson made a cash offer of $53 a share in November. Now that's an improvement over a proposal of $48 it made back in May. Emerson says National Instruments has refused to work it over the past 8 months. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
So it looks like we're going to make a little bit of a turnaround, test some of these support levels next. See how deep we actually go. Could be a very shallow pullback and then straight back in. Copper's coming nicely, very, very nicely into profit as well. Very nicely. FTM continues to hold well as well. See what we can get, yeah. Seeing some supply being dumped there on Bitcoin. This is still nice.
Inflation will eventually come down, maybe just to 2.5%, not to 2%, but interest rates are not going to come down to the same level as they were before. They're not going to come down to the same level as we saw. I wouldn't be surprised to have, say, a Fed funds rate of 3.5 quite a while from now.
Ken Rogoff there, the Harvard professor and former IMF chief economist, sitting down with Bloomberg's Lisa Abramowitz a little bit earlier. We're going to catch up with Bramo in just a second. Equity futures right now are negative by about 1/3 of 1% on the S&P 500. Softer, lighter, negative to kick off the trading week. For those of you who enjoyed a long weekend, stay safe. Welcome back. The bond market yields are higher, Tom, by 4 basis points. Your 10-year 354.76 and crude. There it is, TK. Sticking with.
Here we go, breaking point 4 copper. If you manage to break through that level, got plenty of room to come back down. Lots of room.
Now nicely above 80, and Brent crude rounded up with a vector up $86 a barrel, and Brent crude oil is moving.
We got some China data overnight.
Oil is moving, yes it is. And we are in.
Right the way through it, looked past it and said things are going to get better by the end of the year.
So will the government, and Curran talked about that, the pressure.
See where we can go with this.
He made very clear, both on-air folks and off-air, that, ended talking about Hong Kong opening. I've got some family conversations over there talking about back to normal. Are they at normal? I'm not sure. We don't have that knowledge, but we can say within the heartache of COVID, real issues with their old people, unvaccinated, there is an effort to get back.
That's the message they want to sell in Davos, Switzerland this morning, that's for sure. We heard from the Vice Premier a little bit earlier who said China is back to normal. Tom, you can decide whether you think it is or not, and I'm sure the people within that country will make that call for themselves.
Well, we'll have to see. I think one more thought here, John, on China, which is there as data dependent as we are. We've got retail sales coming up later this week, and then on to the February 1 Fed meeting. It's a different world over there, but it's no different. To me, the big number here is Japan's CPI. The Bloomberg Terminal, folks, is a 4% statistic on Japan inflation. John, that's like the Netherlands, 11, 12%.
I think the BOJ decision is fascinating. What's fascinating is all 43 economists surveyed by Bloomberg except one expect no change.
Right.
Except market participants are really focused on what happens, and I think we get some forecasts from the BOJ as well, Tom, alongside that decision.
Right now, our Lisa Abramowitz is at the meetings in the World Economic Forum in Davos, Switzerland, and joins us now after doing what you do, which is you talk to somebody with legitimate academic and engineering competence on the auto business. George Berzer is with Mercedes, and Lisa visited Mercedes to talk to the guy totally up to speed on gas, EV, and hybrid. Lisa, what did you learn?
Well, Tom, you guys were framing it really well about how people want to believe China is going to reopen, the optimism that people are looking for at Davos. And before I came here, I wanted to visit someplace on the ground that was dealing with some of these 30,000-foot issues that everyone's talking about here: supply chain disruptions, the energy crisis, and potential geopolitical risks. Read China's reopening and what that means. Someone who's dealing with that in a more concrete way, Jörg Berzer, deals with that with having to head supply chains, head production for Mercedes-Benz. Take a listen to what he had to say.
We're in the middle of one of the biggest and most important transformations of an industry. We decided 3 years ago.
Come on, give me something. Oil back up, short, nice shallow test.
And obviously now, we're scaling up electromobility production. I think we will still have interesting situation on the supply chain. Semiconductors is not over. One of our biggest but also most interesting challenges is the ramp up of electromobility. What we learned now in the last weeks, also out of China, we mastered the challenge. So this fast decision making, a lot of creativity, a lot of trust in the local team. China is a very, very important market for us. What we are really focusing on is to create the most efficient and the most resilient supply chain.
What was clear to me from the conversation with Jörg Burzer was that China is such an important market for Germany, for a lot of the world. And so, yes, a lot of the potential optimism is hinging on the reopening there, and people want to believe in that, but also that decoupling isn't happening as quickly as people think, because a lot of nations, Germany in particular, really relies on trade with China for a lot of the economic momentum.
Lisa, how has Mercedes adapted to the small issue of a war in Ukraine?
They've been really focused on diversifying their energy sources. They've got a solar plant on the ceiling. They deal with wind power. They have a whole host of batteries, old batteries, electric batteries from cars that they use to power parts of their operations. They're trying to insulate themselves that way. But this has been a huge issue, right? And that was one underpinning the conversation. Mercedes thinks that the world is going to be mostly electric with respect to EVs by 2030, and this will accelerate that. On the flip side, I was saying to him, what about all these people who are investing in fossil fuels right now and are sort of ignoring what's going on? And he said, no, this is really what's going to be there. Also, I just want to say, there were robots everywhere. There were little robots, there were big robots. One of them almost ran me over. And it was interesting to me how much they're investing in some of the technology to replace menial labor, basically to make things more efficient. And they said it was about 20 to 25% more efficient. And they said that all of their colleagues are doing the same thing. To me, this is really interesting, that level of investment that's going to be happening that could potentially transform certain parts of certain industrial complexes.
Hey Lisa, you mentioned EVs. Let's talk about the elephant in the room. The news last week, 20% price cut at Tesla for some vehicles across Europe and across the United States as well. Bramo, how are the likes of Mercedes going to respond to that?
Well, they also recently announced a slight price cut over in China. There is an issue of trying to corner the market, and it's which market are you cornering? Tesla perhaps is competing with perhaps slightly different types of competitors than Mercedes, which is a luxury vehicle. But you're right, there is this price competition, and I think that what you could feel in the conversations that I had with everyone there was a bit of a test. We've never been here before with prices moving up so quickly that people are able to basically throw out their price and see whether people are willing to take it. So there's a question of whether this is a lack of demand or whether this is getting too greedy, of whether this is looking for profit margins that are too fat. And I don't know the answer to that. I don't know that they do either, but it does seem like there still is quite a bit of demand.
Come on, breakthrough.
For electric vehicles, or at least that's what they're putting out there.
Well, they've had a tough time of it, that's for sure, in the last 12 months. Having a good time of it. Chevron, you're going to catch up with Mike Wirth a little bit later, Lisa. I'm thinking about an hour from now. What's the focus of that?
I want to know about when they expect to see China's demand come online, given the fact that everyone's talking about how this is going to generate growth. We've been talking extensively, I know you and Tom talking a lot about when this causes prices of oil to rise. We're seeing a little bit of that. How much more do they see that coming down the pike? Where are they changing some of their drilling and exploration in response to geopolitical risks? Have they rejiggered some of that? And also, are they investing more in fossil fuels? Are their investors allowing that and actually rewarding them more for making investments that a couple of years ago they would have kind of shunned because of ESG concerns? I'm curious about that sea change and how they're responding to it.
Looking forward to the conversation, Lisa. Great work, as always, and looking forward to the week ahead with you as well. Lisa Abramowitz there, the World Economic Forum in Davos, Switzerland, Tom. Mike Wirth of Chevron coming up in about an hour from now.
The engineer from Boulder, and I know it well. He was about 8 years behind me there, and all I can tell you is his biggest headache is how to compete with other big oil.
Thank you for the like on the stream, much appreciated. Yeah, always appreciate it.
Type 2, how to not screw it up. It's amazingly serious about how not to buy. Yeah, Chevron.
Mention a certain British company that may have done that.
Exactly. You're way ahead of me on this, but
Come on, what's happening?
guys are a generation behind massive
Come on, copper, give me something.
And that's why we've had the rally the last couple of years in energy, right?
Yeah.
They were bruised. They were battered off the back of over-investing.
Can I bring up something I think is really important? I went back and forth.
What are you looking at?
I went back and forth with Francine Lacroix this weekend. She's just written with Lucia Giftapoulou a brilliant story on what matters with Lawrence Fink. We're making fun of the Davos jabber. And Larry Fink, talking with Francine Lacroix, talked about what I think is his third rail right now, which is ESG is blown up. It's probably good that I'm not in Davos because my questions would be brutal on this. ESG has been run over by the war in Ukraine and by the dynamics we've seen on, and I say this is somewhat in spoof, King Coal. And
We're looking better.
ESG narrative, it's become ugly and it's become personal as people go after it.
How active do we want?
Okay, right. We are roughly an hour and a half away from that New York Open. We are going to cut the live stream here, and then we'll come back about 2 o'clock-ish, about half an hour, 15 minutes before that New York Open for the New York Open in live trading session. So come join us, 2 o'clock, 2:15. We'll be back live. Those that have been with us throughout, thank you very much. Cashed in on some nice profit. So bring on that New York, that American volume. That's exactly what we want to see for some movement in the market. Thank you. And hopefully I'll see you for that New York opening session. Cheers.